Hi, my name is Judith Tan. I'm head of capital markets for Estateguru. And here are my esteemed colleagues. Artūras is going to introduce himself, and Tero, and also Tauri. The purpose of this session really is to cover what we do at Estateguru in terms of our lending, our practices, but also to cover the background of the Baltic real estate market as it stands at the moment. As we know, the economy, more in the Eurozone, is contracting, it's shrinking, and even though there's a weaker economy, labor markets have maintained to be fairly resilient despite it all. Inflation up sharply, and interest rates, as we know, are continuing to be at the highest end of the spectrum. So luckily for us, the ECB is continuing to pump money into the system, and that provides opportunities for us as a company, but also opportunities for investors that may want to participate in the Finnish and Baltic real estate markets. So perhaps maybe very quickly, everyone can introduce themselves, and then we can go into the Q&A.
Okay, so hi everyone, my name is Artūras. I am the country manager for Estateguru Lithuania.
Hello everyone, I'm Tero Suvanto, I'm the country manager for Finland.
And I am Estonian country manager, Tauri Tiik.
Fantastic. Well, new loan originations. There's been, as I mentioned previously, recent economic changes, not to mention we had the war. What significant shifts have occurred in the criteria for selecting debtors for new loans? Perhaps whoever wants to go first. Tauri, you'd want to kick off?
Here in Estonia, we are basically looking more like what is the property, where the property is located. Of course, we are more digging deep who is the basically the developer who is developing the real estate, or when it's not development loan, then we are looking like the whole picture and the background experience, how long the person has had the market experience, and so on. So yes, the rules has been more tightened during this period.
Yes, more or less same in Finland as in Estonia. We have to remember that Finland is a big country, and we are concentrating to the growth centers only. If there are cases outside of the growth centers, we are really selective with those cases and checking the background very carefully, and the loan amount also would be smaller. But in the growth centers, yes, we have a bit tightened credit policy nowadays. We are checking the background of the borrowers, and we are quite carefully also taking a look to the case background. For example, if it would be a bridge loan or a cash flow case, we would check carefully where the cash flow is coming from, what business sector the borrower is working for, and so on. So, but more or less same as in Estonia.
What comes to Lithuania, like in other countries, it's basically about, in general, about the liquidity of the loan itself, of the property, which means property and the business plan, as well as maturity of the borrower. If basically these times came that we have to finance something which is much more liquid in the face of all the economical environment, as well as we need to deal only with the mature companies, those who have something behind their back, who have some track record, and as well as some clients. Basically, all the properties which we are financing now, they are pre-sold, or so we have some preliminary agreements, etc. This is at the moment something which is necessary absolutely in any case. As well as it's important at the moment for our new loans to fully meet ECFR criteria, which is also important. There are some significant restrictions for the borrowers in terms of criminal record checks, in terms of loan amounts itself per year, etc. So it's quite a significant difference, since even what we had a year ago.
That's fantastic. Thank you very much. And so actually the exit strategy, the business plan of the borrower experience, in summary, actually is quite important. And you know, from our perspective as well, the borrower track record and repayments, very important for obviously re-lending in this current market environment. What has changed for the borrower in each market and access to credit and liquidity from each of your point of views? Perhaps maybe Tauri can start.
I would say in Estonia we see how the bigger institutional banks are acting, and for example when previously all the institutional banks were offering quite easy the loan, then also currently the risk policies have applied more efficiently. I mean by that they are also taking lower risks. So it's the appetite, the risk appetite has definitely gone down. So by this I mean that the borrowers can't access so easily anymore the capital, but if we are talking about real estate market, then here on the Estonian market we see still that the offering and the need on the market is in quite good balance. So they are basically finding new ways, and here is the moment where we are coming into the game. So if you are not basically okay today to go to the bank, or the bank policies are saying then we are the alternative option what you can use as an SME owner or developer.
So in Finland, the banks are getting the traditional banks are getting really cautious towards when speaking about real estate and construction. So even bigger companies are struggling to get loans with acceptable terms from the traditional banks. Of course, the companies, whether it's construction or real estate investments, if there is a strong balance sheet and a good company track record, those companies are still getting loans from the traditional banks. However, we have seen applications, and we have had discussions and negotiations with type of companies who didn't come to us, let's say 1 year ago or 1.5 years ago. And in that sense, our market position is getting better. We can still provide loans for these companies who are not now getting loans from the traditional banks. What comes to our competitors, let's say non-traditional financiers in Finnish markets, quite many of them are also quite cautious, and some of them are not doing real estate financing at all anymore. So in that sense, I would say that Estateguru's market position is getting better.
But we have to also mention that it's actually such situation is called like when we are saying that the borrowers are becoming better, but it's for all credit market, because some companies which haven't even used bank money, they are approaching the bank when the world is, let's say, standing. Those companies which were good clients for the banks in a good time are starting moving toward alternative financing, etc. So for us and our clients, our customers, I mean investors, we are able to provide a better quality product ourselves. We can provide better quality projects, as well as one more supporting fact is that the amount of the initial sales on the newly built market is let's say recordly low, and the borrowers they don't have an option to get lots of pre-sales and to get a huge amount of money for their construction, and not even, let's say, use any financial instrument. So this option is at the moment excluded. Therefore, they have to use financing and us as well since day one, which they wouldn't do even 1 year ago. However, what we also notice that even though that there are very low sales on in the stage of newly built apartment, people don't want to buy anything from the scratch. But we see that there is only around 17% drop in secondary market, which means that people do buy and still do buy a lot of properties on a secondary market. So it means that when the unit is built and ready, it will always get sold, even in these circumstances.
I would maybe add also why Estonia said that this for supporting Artūras, that yes, our borrowers' portfolio is becoming more better, because these who are not today who are not getting the financing by the banks, then we are more like we can more select the ones who are coming to us and getting the financing.
That's great. I mean, obviously the stress of inflation and construction costs limits the amount of liquidity that these borrowers have. So as a company, we do scrutinize those costs, and then we also use that to help size the amount of proceeds. We also know that things are taking longer in terms of the sales, so we have to allow for that as well. But yeah, we understand that location is key, and also the borrower level experience and their track record is also key. They will obviously give you better information to be able to do their assessments. Great. Okay, well, second point, I think we all actually are very topical, interest rates and investment outcomes. So what are the current and anticipated trends in interest rates this year that you guys can see, that you can talk about?
As the Euribor has made tremendous change on the market, I think it's historically the highest Euribor what we have seen. So currently, as I see, the Euribor could be like stay on this level, maybe a bit come down, as the inflation rates are also like starting to come down. But talking about going zero again, I think that it's not in the nearest future when the interest is getting back to the zero from the Euribor view. Estateguru's interest rates, we are actually working on a model that could take all the market risks into account, and we would like to, of course, offer better interest rates for our investors, but at the same time we have to be we have to find good balance between the market options, because we have still some competitors who are able to offer also lower interest rates. So here we have to be very according to the market and see what is happening on the market. So I think that currently the interest rates on our platform, at least from Estonian side, will stay where they are, and we are not seeing the 8% loans in the nearest year, I would say.
Yes, in Finland, in general, of course, the Euribor is same for all of us, but how the traditional banks are now pricing their loans, it's for the construction companies and real estate, Euribor plus 2% or maybe even 3%, and that is still a bit lower than our interest rates. At the moment, the loans what we are putting to the marketplace, the interest rate is between 10-12%. And compared to the banks, the difference is not big, but there is a little bit difference. However, the cases what the banks are taking are maybe a bit different. So in that sense, there is no direct competition between the banks and us. In general, what the higher interest rate is causing to Finnish economy is quite a big impact, because we are in a eurozone and the countries are in different stages concerning the economical situation. And in Finland, these high interest rates are causing a lot of damage at the moment. And our economy is already going down and slowing down, and it is possible that at the end of the year we are facing a recession, and we are going below zero in GDP. And in that sense, we are really waiting that the Euribor is coming down, and that would give the positive impact to Finnish economy in general, of course, especially to real estate and construction.
But again, in general, when we talk about our interest rates, we need to also consider the quality of our product, let's say. So we were used to change, let's say, our interest rate. However, at the moment, we are expecting, and at the moment we are negotiating some borrowers and some projects which in so-called normal circumstances wouldn't have ever approached the platform. Therefore, investor for our traditional interest rates, they can participate in the projects which would in normal circumstances would have been closed. They would have been used for some bunch of small institutional investors who has to invest at least 200,000, etc. So these projects there at the moment also are about to approach the platform. Therefore, if you get the same interest rate, but the quality of the product is significantly different. So what we are doing at the moment is, let's say, equalizing everyone. Our interest rate cannot just jump over one way or another. However, we can and we do adjust the product itself. Therefore, we believe that investors can really find something suitable for them in that sense. And our interest rate, I mean, due to Euribor and everything, there is no financial way to just increase it. It is much more important to change the quality of the product.
That's right. Also borrower affordability, right, and risk return. So obviously you have a couple of levers in your toolkit. You have lower leverage than what was before to allow for that, and also higher leverage would require, I guess, a higher risk premium. So, these things are all taken into account, I think, much more in this market. Would you agree?
Absolutely.
Yeah. And then, and that also impacts the risk return. So I guess, in addition to that, that would also impact the debt recovery process in each country. So what do you think are the factors that impact those the most in each, would you say?
In Estonia, we have quite good processes in place. So all by legally, it's also quite easy to solve all the defaults. So there is concrete limits how long is every action taking. There is no in some European markets, I know that the process can be very long and stressful. But here, most of the borrowers at first they try to cooperate with us. They try to solve the issue without any auctions. So this is the best also always for us and for also the borrower. But here, of course, there is some cases where you can never know where is coming somebody's lawyer and then starting to go against the process. So some special cases could go longer and take longer time to solve. But mostly we here in Estonia, we are as Estonia is quite a small country and everybody know everyone's. Then we know that everybody wants to solve the issues, and the solving is the main thing, and most of the cases are very solvable, and that's why we have also quite low level of the defaults.
Unfortunately, the situation in Finland is not so easy as in Estonia, but on the other hand, the process is really scrutinized, and we know what we are doing. We are not sitting on top of our hands. We are really active with all the defaults what we have. Unfortunately, at the moment, there is an increasing amount of defaults because of the bad situation in real estate and construction in Finland. However, the process is going like a train, that we have a certain legal processes what we are following, and that those are really like established systems in Finland, and unfortunately it takes quite a long time, usually up to a year or even longer, depending how cooperative the borrower is. We have both kind of cases, that sometimes the borrower is really cooperative and then it's easier, and but sometimes we have to go step by step in the court first, and then we have the final decision from there, and then the case goes to the bailiff's hands, and at the final step is to have either auction or free sale of the collateral. And this far everything has gone quite well, but just taking quite a lot of time.
So more than a year then?
Sometimes more than a year, unfortunately.
Okay.
But maybe let's say general things for recovery is maturity of the borrower. One of the major factors, because it's a different borrower, mature borrower is acting a little bit differently than the amateur one, let's say. And if it's like with a professional fighter and a professional fighter, so it's very easy to compare. How do they fight for their property? As well as liquidity of the property as well is very important, because more liquid the property is, sometimes it seems, everyone thinks that more liquid the property is, the easier it is to just put it to the auction or somewhere else. But the reality is that for the more liquid it is, more people want to get it, and more people are starting to try to influence the default process. And as well as the complexity of the project itself, because some projects, they are complex in, let's say, it's a multi-residential apartment in the old town, and we always get questions from investors, why do this or this is taking so much time for us to recover. But I always say that, guys, it's a simple due diligence process. Imagine that you want to sell a little bit more expensive apartment for, let's say, 700,000 euros somewhere in the capital city. It would take you sometimes half a year to sell it. People would come, people would check this and that. Not even talking about commercial properties where you have to check cash flows, contracts, and all of that stuff. And those, in reality, for the funds and even for professional investors, it takes up to 1 year, but no one is talking about it. So basically, most of our projects, they are really demanded on the market in terms of successful sale. However, the due diligence process takes time, sometimes up to 6 or 7 months for other credit institutions to overtake it, and it's absolutely normal. And that's what we want to say to our investors, that sometimes when there are significantly good loans, they look nice, they are okay, default process takes 6 or 7 months, but it's normal. It is how it's supposed to work in civilized world.
Yeah. But obviously prevailing market conditions make it more difficult and takes time. But yes, all those factors prevail. But I guess on that, in terms of activity, what are the current anticipated trends in exiting for developers in terms of pricing? I mean,
the developers are still in Estonia. The market, as I told, the offering and the need and the market is quite healthy. So most of the projects are getting done. Some of the developers have started recently new projects. And even with the bank financing. So not all the projects are standing still. So. Of course, bigger developers, they are still waiting for the pre-sales, But what comes to our segment, the SMEs who are developing these projects are most likely, of course, we are looking also the pre-sales. The more is the pre-sales done, the better it is. But it's of course matter of time, and it's getting quite rapidly sold as we see. Like normally, previously it was up to 6 months, but now in terms of from starting to building until they give the keys to the final customer, it's up to 1 year, I would say, doable.
In Finland, the sector of new apartments is quite difficult at the moment, especially when it comes to smaller apartments like studios and other types of construction which has been directed to private investors. It was quite popular in Finland to have this buy-to-rent type of flats. Private investors were buying 1 or 2 of those, and that market is totally frozen at the moment. Luckily, our customers, our borrowers are not having too many of these kind of projects. Our borrowers are mainly having family apartments and family size developments. And that market is still ongoing, let's say, somewhat well, not as good as 1-2 years ago, but the apartments are still moving. Maybe a couple of words about the commercial side as well. There are occasionally even bigger transactions in commercial side as well, but we have seen a quite dramatic drop of the volumes of commercial real estate transactions.
Well, in Lithuania we have a situation where the borrower had a record pre-sale since 2021, and we calculated that it would take another 1.5 years, even since now, until they will finish all the projects which they have already pre-sold, meaning that for another almost 1 year they wouldn't need to think about some big decreases of the price. They can control supply by not putting any new projects.
So interesting.
They have very good pre-sales, and that's why we have such kind of a unique situation where some companies, they might stop, some prices might fall, some let's say we can see even recession, but the developers, they have an ability to keep the price, the square meter price up. Of course, we see that at the moment where we see that they make a little discounts up to 7%, 5%, which is not really significant, and it's hidden within some kind of something in addition. I don't know, garage or parking space, but nothing major, and no major changes for, I believe, for 1.5 years.
Maybe one addition to the Finnish market. We have seen already that the prices have turned to have a small increase already.
That's interesting.
Yes. So what we think that at the moment we are on the lowest bottom of the market, and since we have seen already the signs of increased pricing in residential side, we are expecting that let's say more or less end of the year or beginning of next year we shall see already some positive signs of recovery of the residential market, and the fundament is still there that people are moving from smaller places to growth centers, and that is still there. So people still need new apartments, and nothing can stop that.
Tauri, any price drops on your side?
Yeah, I would also comment on the prices. In Estonia, the real estate value or the prices have been growing during the last couple of days. I just yesterday saw the statistics. was 211%, which drives us to the top of European market. But during the last this increased Euribor period, the prices have not actually dropped in the biggest centers. So if we are looking of course, the average Estonian price, if we consider everything except the capital, the average price is there somewhere 1.3 thousand euros per square meter. If we are considering the wealthiest areas, Tallinn, Tartu, Pärnu, the biggest cities, there the prices have not dropped. They are still staying on the same level. The level is in Tallinn, for example, 2.8 thousand euros. So, of course, you are getting the developers are not making you any discounts, but there is option to get for example, some storage room or parking lot as an extra. But overall, the prices haven't dropped in a bigger wise. So we see that the prices are still holding the position. The people's wages are coming up, and basically this is the new normality what we can see here in terms of prices.
Well, that's fairly positive news, because intuitively one would think the price would be dropping for developers to liquidate, to get cash. So that's interesting news. So the supply and demand economics are different in each market, and it's good to see that, that we're playing in the right space in each of these markets. Okay, well, I guess the last question, and we'll just do this quite quickly because we have limited time, is really the market impact on crowdfunding in general, and how we believe the economic environment is affecting the crowdfunding platforms and the banks. I mean, from your discussion with investors and, the market, local markets, what are your views on each of those?
Let's say, by Estonian side, for starting again, we see many companies are offering bonds, for example, that are not secured collaterals. So this investment option, if you make the option to invest into bonds, it's quite good, but still there is no collateral. If by the investor view coming to crowdfunding platforms, then the quality, as we mentioned before, of the borrowers who are we financing, the SMEs, the selection is better, so the filter is more tightened. So it means that, and there is always collateral. It means that by investor side of or by investor view, I would say it's very good position where we are currently. If the economy would drop down totally, then of course the market situation or the liquidity of the real estate can be in danger. But currently, I wouldn't say that we are heading into something big or something where we see the liquidity of going zero as a real estate market. Mm.
Okay.
Yeah, what it comes to Estateguru's investors and our liquidity, now it looks that the investment market has been recovered a bit, and we have a lot of positive signs. From the private side, we have had quite big repayments and still coming these repayments, so there is quite a lot of liquidity in the platform, so we can take a lot of new cases. We have also seen institutional investors increasing interest towards us, and we have had a quite nice deal recently all the way from Japan. and hopefully new ones coming in the near future. What comes to the investment sector in general in Finland and especially to real estate, we have seen interest, of course, all the time from the other Nordic countries. The markets are really close to each other, and there are constant investments from Sweden to Finland, for example. But more interesting is that, for example, from North America are now at least one, maybe even more investors screening the Finnish market and interested in investing to residential real estate.
When in Lithuania we had it's very popular to invest in small apartments. Everyone who had at least some savings was trying to buy some small apartment to rent it out. And at the moment when the prices of the real estate are, let's say, that high, it becomes much more difficult to buy it. Therefore, you have to use those money somewhere else. Mm-hmm. And this means that our let's say product becomes a little bit more even interesting for those retail investors, how to get into this investment world naturally. And moreover, lots of the developers who were let's say depending on those investors when they were designing their property, when they were designing the sales, they were considering up to 40 to 50% in Lithuanian properties were already pre-sold to such retail investors. So you can imagine what is the difference in the supply when those buyers at the moment they just left. They left due to high Euribor, they left due to uncertainty, etc. So as borrowers need to change alternative way of financing, the same way investors need to find alternative ways to invest, even into the same real estate. Therefore, I think that it's a great opportunity for our platform. I believe that mainly one thing which we also forget, that a company like ours and crowdfunding itself went into commercial life, especially after crisis, where when everything stopped, platforms like ours started this financing processes again. We were the ones. We are born from the crisis. This is right. We are at the moment in our natural environment, so it's a place where you are supposed to be.
So we think in this current instance there'll be opportunities to develop new products. Absolutely. To be flexible for the best borrowers we have on our platform, with the best track records, repayment profiles, to come up with new products that are eligible for investors to invest in the near future. Also, there's been some trend for cooperating with banks as well, because bank capital has increased and large exposures for them are becoming issues. So it will also give opportunities for platform investors to potentially co-invest. And maybe that's where the future lies, perhaps.
Absolutely, and then when we came under supervision of financial inspection with our new license, it means that we are actually also more safe for the banks. We are safe for the whole investors. We have very concrete rules, and that we have to keep the track record. So we basically we are becoming better and better.
Okay. Great. Well, I think that wraps up our session. I think there is one question that was from the audience that has been promoted, I think, internally, and that related to the when the money is going to be returned from Germany. And I think from a corporate perspective, we can say that we have a dedicated team working very hard on the recoveries of each of those assets. It's like, as we mentioned previously and alluded to previously, in each country it has different workout regimes. And any institutional investor can say for Germany, the workout time frame is quite long. Especially now, given the current economic conditions in Germany, where we are seeing 1 in 3 bankruptcies from developers. It's all in the press. Nobody can attest to the fact they haven't read that. Things will take longer. But having said that, we do believe there's a trajectory of recovery in Germany, but it will take time. And that's all I can say for that at this moment in time. Well, thank you very much for tuning in to our session. We hope to do a few more of these and make it more educational for the investors that we have on our platform. Also, maybe next time we can cover a bit more about the economy. I think there's lots of misconceptions about the Baltics, and I feel that it's our job to educate consumers as well as investors and our borrowers as to what we're doing and also how our approach is and what these local economies are performing. Thank you very much, everyone.
Thanks for joining.
Thank you.